And in the U.S., stock index futures had significant losses ahead of open, but still pointed to a sharply negative open as the sell-off continues to weigh on sentiment worldwide. On Monday, the Dow Jones Industrial Average dropped to 1,175 points to close down at 24,345 points, having briefly declined more than 1,500 points during the session, with other major indices closing sharply lower. While there was no particular piece of news that pushed major U.S. indices deep into the red on Monday, the recent moves in the bond market have added volatility and concern to the market. Consequently, investors are paying close attention to not only the bond market, but how the U.S. Federal Reserve will react to this as Jerome Powell takes on the position as chair of the U.S. Central Bank. Also today, data and earnings are set to keep investors somewhat busy as the sell-off continues to simmer. In Asia, indices closed sharply lower today following massive losses seen stateside in the last session. Japan's Nikkei 225 closed down 4.73%. Across the Korean Strait, the Kospi declined 1.54%. In Australia, the ASX 200 declined 3.2% to finish the session at 5,833 points. The heavily weighted financial sector was also sharply lower, with Australia's big four banks closing in the red. The Hang Seng Index was down 4.39%. Mainland stocks, which had risen in the last session, followed the region lower today. The Shanghai Composite slid 3.8% and the Shenzhen Composite lost 4.4%. And commodities from crude oil to metals and iron seem to have been dragged into global sell-offs. Brent crude futures were down 35 cents at $67.27 a barrel, still up 1% so far in 2018. U.S. West Texas Intermediate crude futures eased by 25 cents to $63.90. Our commodities dropped as the global equity rout and surge in market volatility spurred investors to par risk. Let's talk to one of the research analysts at financial derivatives company, Desola Sumoni, joining us all the way from New York City. Hello, Desola. Good morning. How are you doing today?
Hi, Chimeze. Good morning. Thank you for having me.
Right. So how much impact has the global equity sell-offs had on commodity markets, particularly oil?
Well, like you rightly said, there's a risk pairing, there's an anti-risk sentiment on the global financial markets this past couple of days, and this sentiment has spilled over to the commodities market. While the trigger for the sentiment is, while there's no particular trigger for this risk of sentiment, but it can be attributable to a couple of factors. One being the rising yield of U.S. bonds, as well as uncertainty about the path of the U.S. federal policies, U.S. Fed monetary policy. So this sentiment has spilled over to the commodities market, and that's why we are seeing oil prices, copper and iron ore and some other commodities decline.
And how long do you think this sell-off in global commodities will last?
Oh, well, in addition to the risk of sentiment, we're also seeing that U.S. oil production and crude stockpiles at record levels, and the Baker Hughes data from Baker Hughes showed that the U.S. oil rig count increased by the highest figure in the last 6 months, which indicates that there will be a potential increase in U.S. oil production. So these factors are weighing on crude oil prices, but there's still strong compliance with the OPEC-led production cut. So I do not expect this risk of sentiment to persist in the market because these fundamentals are so strong. So I think this is a short-term phenomenon.
And how does this recent development affect Nigeria's oil revenue or even the price of fuel here in Nigeria?
I think that it has no impact on the budgeted revenue because for the 2017 budget, the benchmark oil price is about $45 per barrel, and currently the oil prices in the global markets are $67 per barrel, which is about 45% above the budgeted benchmark oil price. So it will have no impact on the budgeted revenue. However, maybe, just maybe, it may affect the excess accretion to the excess crude accounts. That is if these developments persist. Otherwise, it may not. It would have zero impact on both the budgeted revenue and on the fuel oil prices in Nigeria. Fuel prices in Nigeria.
And what is the outlook for oil in the near term?
I think the outlook for oil is still positive. Like I said, the fundamentals are still strong. The compliance to the OPEC-led production cuts is still very solid. So we expect that although yes, this risk-off sentiment is causing some form of short-term fluctuations in the oil prices, we expect that it would range between the range of it would trade between the range of $65 to $68 per barrel this week.
All right, thank you very much for your time. Desola Sumoni, research analyst with Financial Derivatives.